Welcome to Finance News Weekly. I'm here with breaking market developments. The S&P 500 just completed an incredible four-day rally, erasing its entire November decline. Fed rate cut odds have surged above 80% for December. JPMorgan is calling for 8,000 on the S&P by next year, and tech giants are flooding the market with massive AI infrastructure deals. Let's dive into this week's most important market moves.
Let's start with the market recovery story. The S&P 500 rose 0.7% on November 26th, extending its rally to 4 consecutive days. Just 1 week ago, the index was down nearly 4% for the month. But now, the MSCI All-Country World Index has trimmed its November decline to just 0.4%. What changed? Renewed bets that the Federal Reserve will cut rates faster than previously thought.
And speaking of the Fed, traders are now pricing in more than an 80% chance of a quarter-point rate cut in December. That's a massive jump from just 30% odds a week ago. The catalyst? Subdued economic data and supportive comments from San Francisco Fed President Mary Daly, who told the Wall Street Journal she'll support a December cut. The October rate cut brought the federal funds rate to 3.75% to 4%, and markets expect more easing. Now for some bullish Wall Street forecasts. JPMorgan strategist Dubravko Lakos-Bujas just issued a year-end 2026 S&P 500 target of 7,500. But here's the kicker. He says 8,000 is in play in a strong scenario. His thesis? Double-digit earnings growth combined with 2 more Fed rate cuts in 2026. That's a pretty optimistic view, considering the S&P closed around 6,700 on November 26th. Switching to tech, let's talk about the AI infrastructure spending spree. Microsoft just secured a $30 billion Azure deal with Anthropic to scale their Claude AI models. Amazon announced $50 billion for government cloud infrastructure, plus a $38 billion partnership with OpenAI. And that's on top of Microsoft's record-breaking $125 billion capital expenditure forecast for 2025. Wall Street is trying to absorb a flood of AI bonds as tech companies fund these massive investments.
Alphabet is having an incredible month. The stock hit all-time highs 13 times in November, rising more than 24% over the past month. The catalyst? Their Gemini 3 AI model, which analysts are calling the current state of the art. The Gemini app has reached 650 million monthly users, and Google Cloud's backlog surged 79% in Q3, nearly doubling the previous quarter's growth rate. Alphabet is now approaching a $4 trillion market cap.
Nvidia reported stunning numbers, but the stock still fell. Q3 revenue jumped 62% to $57 billion, beating estimates. CEO Jensen Huang revealed a $500 billion order book for Blackwell and Rubin AI chips through the end of 2026. But here's the thing. After initially popping 5%, shares reversed and closed down 3%. Why? Investors are fretting about sky-high AI valuations and rising competition, especially after reports that Meta might use Google's chips instead.
Apple just achieved a historic milestone, hitting a $4 trillion market capitalization. Shares reached an all-time closing high of $277.55 on November 26th, up about 21% over the past 3 months. The drivers? Strong iPhone and services revenue, plus optimism about Apple Intelligence AI rolling out across 250 million devices by year-end. The company did announce some rare sales department layoffs, but that hasn't dampened investor enthusiasm.
Now let's talk about what's not working. Cryptocurrency. Bitcoin plunged more than 20% in November to around $91,500. Even worse, roughly $4 billion was pulled from spot Bitcoin and Ethereum ETFs this month, exceeding February's record outflows. The Fear and Greed Index hit 16, the lowest since April, firmly in extreme fear territory. JPMorgan says the correction appears driven by retail selling, with non-crypto investors pulling out of the market. Quick market flash, let's cover some additional tech and earnings stories. Tesla stock fell 9% over 10 days, despite robo-taxi expansion plans, with sales plunging 36% in China. Amazon shares are down 12% since November 1st, despite massive AI investments.
Microsoft stock dropped about 7.5% from late October amid AI spending concerns. And the Bill and Melinda Gates Foundation sold roughly $9 billion of Microsoft stock in Q3, reducing its position by 65%. Mixed signals across big tech.
Moving to Europe, the European Central Bank held all three key interest rates unchanged at its October 30th meeting. Inflation remains close to the 2% target, and market participants have almost fully priced out any further rate cuts in 2025. However, one more cut in 2026 remains possible. This contrasts sharply with the Fed's more aggressive easing path. Meanwhile, average bank lending rates for firms stood at 3.5% in August, and mortgage rates averaged 3.3%.
Let's check in on China and emerging markets. China's Shanghai Composite rose 0.29% to 3,875 points on November 27th, though property developers faced sharp losses after China Vanke delayed a bond repayment. The index is still up 17.59% year-over-year, despite a recent 2.83% monthly decline. Tech stocks are leading gains, while the property sector remains a key risk factor. Separately, the MSCI Emerging Markets Index rose 29% through November 19th, significantly outperforming the S&P 500's 14.2% return.
Commodity Corner: oil prices and the U.S. dollar. The OPEC basket averaged $64.50 per barrel in November, down from $65.21 in October. Brent crude traded above $63 a barrel in late November. OPEC Plus announced plans to pause production increases through March 2026 due to lower expected seasonal demand. Oil prices have fallen 11.58% over the past 12 months. Meanwhile, the U.S. dollar index rose to 99.71, strengthening 0.5% in November, though it's down 5.7% over the past year.
Black Friday consumer spending just wrapped up with interesting signals. Online sales are projected to surpass $11 billion, representing an 8.7% year-over-year increase. However, consumers plan to spend an average of $622 between November 27th and December 1st. That's down 4% from last year. The pullback is largely due to higher cost of living and financial constraints. Only 50% of shoppers plan to increase holiday spending, down from 62% in 2024, with consumer confidence at a 3.5-year low.
Some sector rotation worth noting. The market showed unusual lopsided action in November. Big tech stocks stumbled while retail shares rose. The tech sector within the S&P 500 fell 5% in November, marking its worst month since September 2022. Meanwhile, consumer discretionary and retail stocks showed relative strength ahead of the holiday shopping season. Deere, Dell Technologies, HP, and Autodesk led pre-market moves, with Dell showing particular strength on enterprise AI demand.
A few more notable corporate moves. Warren Buffett's Berkshire Hathaway disclosed a new stake in Alphabet, marking one of his rare major tech investments in recent years. Cathie Wood has been selling Tesla stock, while billionaire Peter Thiel sold about $72 million worth of Tesla shares in Q3, at an average price near $347. And Barron's released their 2025 Sustainable Dividend Stocks list, with 4 safer picks: General Mills, Campbell Soup, Regions Financial, and Avient, meeting ideal criteria for income investors.
Looking at the 2026 outlook, a Reuters poll of equity strategists suggests most major global stock indexes should trade higher by the end of 2026, but will struggle to repeat this year's strong performance. The S&P 500 is forecast to rise approximately 12% by year-end 2026, representing a slight moderation compared to 2025's estimated 14% rise. Wall Street maintains a bullish emerging markets outlook for 2026, citing dollar weakness and AI investment surge as key drivers.
So, what's the bottom line for investors? We're seeing a market that's heavily driven by Fed policy expectations and AI infrastructure spending. The S&P 500 has recovered from its November sell-off, but concentration risk remains high, with Magnificent Seven stocks dominating. Rate-sensitive sectors could benefit from December's likely cut. AI remains the dominant theme, but valuations are stretched and competition is intensifying. Crypto is in severe distress. And consumer spending shows mixed signals heading into 2026.
Looking ahead to next week, keep an eye on these key events. The Fed's December meeting is on everyone's radar with that 80% plus probability of a cut. We'll also see November jobs data and PMI reports that could shift rate expectations. Earnings season is winding down, but watch for any guidance updates from tech companies on AI spending. And globally, China's Central Economic Work Conference in December will set policy priorities for 2026. Stay informed, stay diversified.
That wraps up this week's Finance News Weekly. We covered the market's dramatic recovery on Fed rate cut hopes, JPMorgan's bullish 8,000 target, massive AI infrastructure deals, Alphabet's Gemini 3 success, Nvidia's huge backlog, Apple hitting $4 trillion, Bitcoin's steep decline, and developments across global markets. If you found this helpful, please subscribe and hit the notification bell so you don't miss next week's edition. Thanks for watching, and we'll see you next time.